Hello traders, good morning. This is Giuseppe Basile, also known as the FibStalker. Welcome to this intraday, daily intraday review. Today is May the 8th, 2018. It's 15 past 7 a.m. EST time in Toronto, and this video is part of the FibStalker Asian trading service. So, as usual, I ask you to pause the video and review and accept the usual disclaimer here. The information that is provided here, it's for your general information, and as you know, past performance is not indicative of future results, and trading forex carries a high level of risk and might not be suitable for all investors. All right, so let's get into the markets. We'll start from the dollar index here, and we are witnessing a continued move higher in the dollar index that is now challenging this 50%. This actually 50%, which is an extension short from lows to lows. So if this continues higher, the 61% level at 93, 97, 94 area here, it's going to be pierced. And what could happen is that this market will take profits a little bit or slow down, maybe only after the 61% level will be hit and this previous highs will be tested. So if that's the case, that's the extension long that we are going to trace here. It's not given that the market, if it gets to 94, will actually retrace down into the 92.34, and we will see whether we will need to use any other jumping extensions to capture this market. And we know that whenever the dollar index starts running, there are possibilities. There were some cases in which the market just moves higher and it does not retrace right away. But eventually we should get a retrace for a continuation higher. Could also be in a situation like this, whereas price just continues moving higher until it actually retraces and eventually it's gonna give us an opportunity for for another leg higher. But when we look at the larger time frame here, the a 50% long has traded, and this has targets well above. So we will see where this market is going to stop. All right. So for now, this is good news because the markets will be trending. Of course, if we want to take a longer term position, we need to wait for this market to retrace and then offer a new opportunity. The SP 500 here is moving, continues to move laterally here in what seems to be a never-ending range. There is a possibility for a retest of highs here, but at the moment there is a range here that is printed. Well, actually there are different area of support and resistance here, and so far the market in the last few sessions here has been moving between the 26.15 here, 13 to the 26.80. And so as this market is now retracing here, there is still that extension that I mentioned in the weekend reviews, and that's 26.53, but this is a range, so these levels might not hold here. Look at this, profit taking ads during the beginning of the month here, and now the market is likely going to come back. So not really a big edge in this market. Gold has been challenging that 13 and still doing that 13.11 area. We know that once this market gets below this level here, you know, the 1311 below the 1296, we're gonna see a retest of 1263 eventually. Okay, and you know, whether the dollar index gives an opportunity before or after this market and going higher, and we mentioned that a number of times, so I will be repeating here the information that you already know. The silver is also you know, is also still respecting this 17 level here, despite the bull trap here, and we are likely going to see in the coming weeks price testing 1580 level. Okay, so let's review the US dollar Singapore dollar here first, and of course this market continues higher here. We indicated a number of levels and none of them came into play here. This market has urgency to continue higher, and the even the same anchor here came into play. So because of that, the analysis is pretty straightforward. And you know, despite this market hitting the second target, what came into play here was an inner 50%, and that's you know, we would trace that if this level was not tested. So but that's what the market is using here. You know, whenever is a strong participation, algos have to adapt as well, and this is the anchor being used at the moment, which gives us 134.04, 134.60. So should keep your positions in this long market here, and this market could get into the 134.59. Big profit taking here, and these are the levels in play that we have to watch. The Australian dollar US dollar finally has broken down here. This market has been hovering around the 70 level here for some time. It never came to trade the extension short here, the basket extension short from highs to lows, but inner a jumping extension here has likely traded, and I'm gonna use the low here, the 7107. That's what seems to be driving algorithms. We know that, you know, eventually this market needs to well, it does not need, but it's very likely, because that's where the participation will be. It's very likely that this market is gonna continue lower here and eventually test the 68.47. And this market has been ranging within this area now for 2 years, and we cannot exclude that that's going to continue. So if and when the market gets into the 68.46, we should see some sort of profit taking and bounce here, and eventually a continuation lower. Okay, and of course, if the dollar index continues higher. Australian dollar, it's relatively weaker here, and now started. You remember that this market has tested that 50% that was not tested at the end of last year. You remember that you know, we had issues identifying this bounce here, and the only thing that we could use was an extension along. However, now this level is being pierced here. So as you will remember, there is a sequence of measured move here, and the market started trading in extensions from highs to lows here. We can see that the first target was hit, and now the second target is in play here. Now, if the dollar index continues higher, this market could just continue lower and break this level, and only then we could see a retrace. Okay, so this is now we are in the realm of extensions here, and in fact the aggressive extension is what has traded last week, and we mentioned that, and that's what is now pushing this price lower here. So the extension, the aggressive trace here from lows to lows came into play to the pip, and that's what's pushing this price lower. So we have the larger measure move 78.16 pushing price into that second target, and then we have the second target, which is 73.72, and then we have the inner measure move, which has first target and second target here, helping price into that 61% level. So very technical market with high volume here, and the opportunity was there actually on Friday and at the beginning of the week. Euro dollar obviously also continues lower with the dollar index moving higher, and and jumping. There is a way of saying that I always like to repeat: when you see a move you're not in it, the move has ended. So this move here might continue. The point is that the question here is, how do we manage risk? Okay, if there is a profit taking here and we get on board at lows, we're gonna get creamed. To me, it's always good to to wait for the next retrace and next opportunity. And if this market continues lower, peace. Eventually it will give us an opportunity. Of course, this is a very strong move, and we saw past markets in which the market continued for some time before offering a tradable setup. But whenever that happens, then there is possibility for longer moves and higher profits. So these are safer markets to trade, provided we do not enter on lows here. Okay, pound versus US dollar, same situation here, and we were looking for potential level of retrace. Of course, that retrace is not gonna happen here, and let me remove some of the previous traces here in my mentoring, and here we have a similar situation here, a market that has the potential to trace into the 50%. The level is not that far. Of course, our hope is that this market will print eventually that would print the profit taking event. The market just don't move down forever. As you can see, they can move for several weeks, but then eventually they give us the opportunity for trades and continuation lower. And of course, here there is a 130.58, which is a 50% long, so we can only wait and see whether an opportunity is given before that level is tested. Okay, but that level could be the reason and the catalyst for a profit-taking event. So we need to be patient here. The market are moving strongly. This is a positive thing because they're gonna be follow-ups, and obviously in this kind of markets, if you want to make more money, there is an opportunity for that, but you have to stick with longer. You have to stay in the position and stick to longer trades. For example, in the US Swiss franc, we had this 50%, the first two targets, right? If we exit the second target here, we would have left all this move. Of course, we don't know that, so it's always good to take partial profits. And in this specific case, now this market has tested the previous highs, and this market also, it's very extended and it's prone to corrections, and those corrections could be opportunity to jump on the next move higher. That in this market could actually bring price much higher into 103.14. Okay, so entering at this stage, it's obviously riskier in these markets. Okay, there's no need for that. Because where these kind of markets lack in number of opportunities, they actually make us back on the actual potential gains that we can get if we stay in a position. Okay, in any case, even taking profits here out at the second target, it's in any case a good business here. Okay, so US dollar Canadian dollar, obviously with a strong dollar here, we are seeing this market also negating the previous sequence here. So the longs that have participated, we can see them better on the weekly. The longs that participated here at recent lows are clearly leading the game here, and they are more relevant and important of the shorts that have been trading and on the weekly and on the daily here. And now the last trace, the 129.40, is being challenged here, and at this point I don't anticipate this holding, so we should see 131.44, and eventually whenever and after we get a retrace here, then the 135.77 level could trade again. So when we look at this market here, this market has been holding on top of this level, and the anchor was not the extension along here, but because this market is very extended, other level came into play here, 127.96, and it's an inner measure move here and level, so it was not immediate or easy to identify the level that is driving this price. And if we consider this high here, 126.77, for now the measure move is the one that is here, and the first target 29.69 was it. Second target 130.60 here. It's above. Okay, so this is this is what's going on the US dollar Canadian dollar. Let's see with US dollar Japanese yen, and then a few other pairs here to see what's going on. US dollar Japanese yen is the weaker of the pack here, and this market has been trading below the recent 50% here, highs to lows. That's where the market, so let me see if this is the actual level. Yes, this is the actual level, and sorry, not the actual level, is from the lower highs here. Let me retrace it. It's not the lower highs, it's the highs to lows. Okay, so we got some profit taking there, but this market is still strong, and it's of the pack. I mean, it's the weaker in reality, but because of the action in the dollar index, we're seeing this market continuing higher, and the level here that we had in mind has never traded. So a jumping extension is also supporting this price, and you would expect that because of the strength that we're seeing in this market. Okay, we had already this level traced. This level is being is holding at the moment, and as you can see here, the extension here was respected in the last 3 days, still holding here. So if it holds, that's the level where new longs are going to start from. Euro pound here, we mentioned the sequence of measured moves. You know, there were other analyses showing you know, higher prices. I think a lot of people miss the importance of the sequences of measured moves here, and this market has been taken from this point of view, trading from 90.27 to the first target, and then the next measured move, it's highs to lows here. They came into play, and this market has targets below here, despite the weakness of the euro. You know, we need to see whether the pound will be weaker or not, but the euro pound here is showing a stronger, relatively stronger pound when compared to the euro here. Okay, so let's look at some of the other markets that we are following here. The pound versus Japanese yen also resumed selling here. We were looking at lows to lows here, which never traded. So again, this market is you know, because of the action we're seeing in the dollar, all these markets that actually have, you know, a big hurry to keep moving, and that's not giving us opportunity for low risk trade. And in this market, a low to low came into play. Pound versus Canadian dollar. This market is correcting higher here, and there is an opportunity when we look at the this market here. The recent move, the strong move lower here, is the result of an extension that you know, that has played here, and that gave us the lows to lows. Again, that level has not come into play, so this market is trading other levels here, but there's a possibility, if the test of 175.93 happens here, that's the area where we would see lower we would see a setup. And euro Australian dollar yesterday, he offered a risk-free trade, and today it actually went to retest that extension short. So the sequence here was highs to lows, first and second target. Yesterday it traded the measured move here, and after that actually offer a free trade. But today the weakness in the Australian dollar is relatively bigger than the weakness in the euro, and we saw that fail. Okay, that's not a big deal, because we know that, you know, algos traces actually what they give us risk-free trades, and if the market does not follow, then you know, we end up with a break-even trade. Okay, so this is what's happening in this market at the moment. Okay, so this is it for this brief intraday and daily review today. You have a great day. I will be in the room, and if you have any questions, please let me know. Bye bye now.